All right, Mr. Chokkalingam, do share with our viewers also what's going on with the IT pack. Sure, returns plummeted at the end of the year, but some mid-cap IT stocks today surging in trade. We've also got, the likes of a Tech Mahindra up 3%, lots of buy calls, and an HCL Tech. Our valuation starting to look better at these levels.
They enjoyed super rich valuations before the meltdown. Some of the mid-sized IT companies have reached even 40, 50 PE, and large companies had a 30, 35 PE. And, it was overvalued, but then the market punished them beyond what they deserve because of what's happening in NASDAQ. NASDAQ, all of us know how the technology stocks got butchered. And second, to be fair, the fundamentals also shrank on the domestic front because of employee cost. So many of these companies have seen 50-60% year-on-year rise in the employee cost. If you ask me, I think it has bottomed out. IT sector stocks have bottomed out. This is I may be wrong, but I believe firmly that this is the ideal time to pick up IT stocks. Why I'm saying is that, the rupee has fallen more than 10% in the last 1 year. Of course, all over the world, the currency depreciation is not helping on export front. The vendors have become smart, but still, the employee cost, they will be able to pass on to some extent, to a large extent, with the benefit of rupee depreciation. And secondly, if you look at the industry, whether you take a top tier, 6-7 companies or bottom of mid segment of companies like LTI, many other Infosys, Persistent, the whole industry is dominated by a handful of companies. If you take overall 10 companies, top 10, I'm sure they would account for almost 80% of the total IT exports. What I'm trying to say is that it's such a concentrated industry, would be definitely be able to pass on the employee cost, and also they will be able to control the attrition rate and able to control the aspirations of the IT employees to their benefits. And secondly, the valuations have come down a lot. So therefore, in fact, we have been recommending Oracle Financial Software in the small cap Gensa Technology. Gensa Technology has fallen nearly 60% from the peak, and it has got the digital platform, which is 70% of the total business, which is one of the highest in the industry, and also cash-rich company, and trades at a very cheap. And similarly, Oracle Finance again close to 52-week low now. Interestingly, it's a subsidiary of 40 billion US MNC, and trading at a 2-year low, and it gives you 6% dividend yield if you go by the last year what dividend they have given. And the cheapest technology stock in the country trades at around 11-12 PE, and even in the last 10 years, couple of times the Oracle Finance got beaten down badly. It did reward the investors with a phenomenal return. And also very interesting, this is a product company. The product company, particularly for maintenance charges, they have some cushion to get the benefit of, the rupee depreciation from the vendors. So that's my understanding. So therefore, these are the two stocks I believe possibly can even create a wealth in the next 1 to 2 years, because they are at 2-year low.
Great, Mr. Chokkalingam. Thanks for joining us and taking us through some of your picks, including from the broader markets.